Welcome back to another video on the MHU FX channel. So in today's video, we're going to be talking about low risk trading. So guys, when I say low risk trading, I don't mean low return trading. It has nothing to do with the return. It's more so to do with being confident in taking trades. This video is one not to miss. This will absolutely change the way you see these charts. It will calm down your emotions. It will literally remove fear from your trading, and it should give you more confidence to place that trade. I was speaking to someone the other day, and although the analysis was good, they weren't confident in taking that trade. And so oftentimes they would miss that trade and either enter late or just watch the move go away. Whenever you're consistently entering trades late or watching a trade go from when you could have been in, that's an issue. That would definitely not help your trading. So this whole video is to give you that confidence to actually place a trade. So let's get into it. And for those people that are wondering, where on earth has Harrison been? I had some personal things in my life that I was sorting out. So it was a good time to take some time off to sort that out. And now I'm back. I'm going to be giving you two examples today. I'm going to be giving you guys an example on GBP USD, and I'm also going to give you guys an example on gold. Anyway guys, enough of me talking, let's go straight into the analysis. On my screen you can see GBP USD. With this kind of style of trading, you can do very well, and you guys can go to my Instagram after this video and see, or I might post it again, but you can see that I was in a gold trade, and literally I was in a low risk trade. And when I say low risk, the trade still absolutely banged. It was nothing but confidence. Because certain things played out, I was confident to take this trade. I'm gonna put my annotations back on. I know there's equal highs up here. And I would never be entering a trade from equal highs. God forbid, never do that. That's retail. I don't move that. That's not my vibe. That's not me at all. That's not my style of trading. I like to see these equal highs taken out first before I actually look about getting a trade. Whenever you're not too sure, or whenever you want to just take one extra piece of caution about taking a trade, always wait for the low risk trade. I'm going to break down to you guys what it is now. If you sell from equal highs, that is a high risk trade. Price likes to run out liquidity, and so they could easily run above this high because there's going to be money up there. They might not want to go for this money right now, or they might want to go for the money right now. What you want to see them do is you actually want to see them trade away from here. You want to see them respecting an up close candle. If you enter them from this up close candle from this low to this high, this still would have been a high risk trade. Why? Because price could easily still run out the highs. And yes, I'm aware that this is down triple highs, but this is high risk. There's nothing that's telling you that price wants to drop now. So in other words, it's a high risk trade. Let me put it a different way now. Let's just say there wasn't even equal highs here. Let's say there was no equal highs here, okay, and it was just a high. When price returns up to or close to that high, the first time, price could have just produced a high low to run the highs. You want to see them break away one more time. So you can see here we have an up close candle here, and then price breaks away. You see price break away from the high risk area. And the next thing you want to see is, now you want to see this up close candle up here being mitigated. Your aim is to see that mitigated. So they broke away, they broke beneath all these lows, traded lower, and returns back to the up close candle here. They're coming up for mitigation, as you guys know. And if you don't know about my institutional candle series, yeah, definitely check it out. I'm going to link a card somewhere, and you can just check that out after this video. When they come up to mitigate this up close candle, this is not your entry, family. It's not your entry. You want to see them respect an up close candle. One thing to say as well, don't be panicking. When price is trading away, yeah, do not panic. Don't get FOMO. Don't start stressing. Is price gonna tag me in? Like, sometimes it might not tag you in. So be it. Move on. Come back the next day. Look about another trade setup. It doesn't always come back for you, but when it does, you need to be prepared and ready to take that trade. Like I said, this is not financial advice and anything like that. You always need to back test this. I thoroughly back test this, and when you're confident, do it in your demo account. You want to see price respect the up close candle and then violate the low again. Violate the low again. I'm not entering at no high risk. I want to see market flow switching. I want to see order flow switching. I want to see them mitigating these up close candles, and then I'll be confident to take a sell. In other words, when price trades back up into this up close candle, this becomes your low risk trade or your low risk entry, because price has already respected one up close candle and broken the low again. So in other words, they're not going for the liquidity above this high anymore. And then the moment they break beneath this low, that means this one should also be protected. And so the moment you get a retracement up into this last up close candle, and like I said, anywhere within this up close candle would be a good place to sell, because price is now respecting up close candles. Then you want to target the money, and we got a low down here. This low produced the equal highs. This is the low you want to be taken out. And the best place to place your stop loss is always above the up close candle. My computer just started doing a madness right now, but we're back again. And I'm going to quickly just show you what happens now. So I'm just going to hit play. right? Let's see if it speeds up. There we go, nice and fast. This is what we want to see. So basically, right here, this is where you don't get FOMO. You're waiting for that retracement, and you're waiting patiently. There we go, boom. So right here, you can see, look at that. They traded up into this up close candle, and then this would have been your entry. And I know this is replay mode, but this is what we were talking about. This is what we were looking at. This was the low that we were going for as well. And if I hit play, you can see that eventually we run that low. There we go, boom, right here. Run a low. When the trade is at high risk, if you're fully confident price is going to go down, then look, by all means, take the trade. But if you want to see something more, if you want an extra confirmation, if you want to see them move in your direction first and then jump in, this is exactly what you would do. Now we're going to go ahead to gold to show you another low risk setup. We're on gold right now, and I'm going to show you guys another low risk trading scenario or entry trade, whatever you want to call it. This was another trade that was played out perfectly, played out so well. They're waiting for the low risk setup, seeing the signs first, and then responding accordingly. And so I'm gonna put my analysis on. Okay, here's my analysis. So guys, forget the fact that I was in this trade, this one here and that one there. I did post that on Instagram, so you guys saw that I was in gold from the highs and from, you know, multiple times. I think 2 times from here. Then I closed one and took partials on the other. But anyway, guys, what I want to do is I want to use what we can see here. All of this, right, to show you guys the low risk setup with a low risk trade that I was looking at. First of all, gold was at my area for reversal. That's another day, another topic. It gave me the smart money reversal. We got the generation of liquidity, we got the run of liquidity, and we broke beneath all these lows. As you can see, all these lows, we got violated. What you're looking for is you're looking for price to trade up into the up close candle to catch some kind of selling opportunity to then take price lower. But you know, we don't trade off the 15, we trade off the 1 minute. We have a last up close candle in here that runs out liquidity to the left after they generated equal highs, and they mitigate this one here, this up close candle. And so technically now on the lower time frame, I'm looking about getting a setup. From here, I wanted to catch a lower time frame play to run the money down here. And this is the beauty of this thing. It works on all time frames. The low risk setup here would be if we're looking at just trading this range from this high to this low and then catching a low risk based off of this, is price would have to trade up into it, respect this last up close candle, mitigate at this position and break beneath the low, continue to drop, and then come back up to whichever up close candle we're going to be playing off here, right? So that's that time frame. And so this is what I'm going to do. I'm going to look at what prices show me here, and I'm going to look about catching a low risk setup. So I'm going to just delete this because this is not the one that I was even referring to. Boom, because this is going to blow your mind. You know where the money is down here, so you know what your targets are going to be, but you're looking for the low risk setup. We have an up close candle here. That's the first one. If we're going off this price action here, this is the first one. We break beneath the up close candle and then we return back to the up close candle. And what do we do? Like I said, this would be high risk. If we're just looking at what's happening here, all of this entry would be high risk. And by the way, there's nothing wrong with high risk entries if you're confident price is going to go lower. But if you want that extra piece of confirmation, then you better wait for that low risk entry. You better sit your butt down and wait. Be patient. Don't be panicky. Don't be thinking about, oh no, is it going to come back? Just wait. If it doesn't come back, forget it. But what you want to see them do is you want to see them trade up, respect an up close candle, break beneath the low of it, and then return back to the up close candle for an entry to then run it to the money. So that's exactly what I did. Although I was in from the high, this high as well, and this one, but I just wanted to show you what my thought process was. And so I'm gonna hit play. Once again, look, the up close candles from this low to this high. 50% is where most of the volume is. This is where I'm looking about catching a trade. Let's hit play. There we go. There we go. Boom. Right here. Right here is where we catch the entry for the low risk setup, and it instantly drops I believe it's like 100 and something pips. So that alone would have been more than enough. I'm going to be waiting for the money to be taken. And so I'm just hit play. I believe we went into the next day for this to happen. I believe. I can't remember actually. Let me check. Yeah, let's just hit play. There we go. And you guys know where the money is. What I'm going to do? I'm going to do this like that. Yeah, there we go. Let's do it like that. There we go. You can see what it's doing. Look, it's teasing us, getting lower, running out liquidity, shooting back up. It came right back up again, ran these highs, and then hit play. There we go. This didn't stop me out. As you can see, we generate some kind of equal lows. So, you know, we want to go lower still. And so I'm holding. There we go. And then look at that. With speed, we smash, absolutely take out these lows. And this is what you're going to be finding whenever they go to take out liquidity. They normally do it with some kind of speed. They normally do it with some kind of force, right? With force. And they do the exact same thing with force again, as you can see. Do you see now how the low reset up? At my level for reversal, looking at the price here, the high is obviously going to be a high risk trade. When it returns back to it, it's still a high risk trade because it can easily run out the high, but you want to catch the next one after it respects the up close candle. So it respected this up close candle here and traded lower. When I say respected, I mean it didn't beat the high. And then you want to catch your entry here, right here, anywhere within this up close candle. And it was just unfortunate it didn't do it straight away, but it just meant that we just had to be more patient and wait for it to run. You know, Go likes to play some games. That is low risk trading. That is how you can literally remove all kinds of fear. You can be more confident in taking a trade. If you're waiting for certain things to happen first, once you get those things, then take action. Be confident in your trading, be confident in your analysis. And guess what, family? If it doesn't come back, it doesn't come back. Don't stress yourself. Keep it moving. Anyway, family, thank you guys for watching the video. Peace.